Economic data? We don't need no stinking economic data. It's Oscar week, and Investor Beat starts now. Thanks for watching. I'm Chris Hill, the treasurer of this year on Madre, right? We all know that Oscar winner. Nothing but green lights to start the week on Wall Street. The NASDAQ hitting a 14-year high, the S&P 500 hitting an all-time high, and the Dow Index rising just because it can. Joining me in studio today, Jason Moser and Taylor Muckerman. Guys, our top story today, Netflix has agreed to pay Comcast an undisclosed sum of money to ensure its streaming video runs smoothly on the company's network. The deal is seen as a precedent for Netflix's dealings with other broadband providers. It seems like the first domino to fall. Is this a smart move if you're Netflix?
Am I the only one that really wants this sum to actually be disclosed? I want to know how much money they're paying.
I think we all do.
And actually, in all honesty, I think it's probably lower than a lot of people maybe think. But I mean, this was bound to happen at some point, right? We always talk about sort of the value in the pipes there that ISPs like Comcast and Time Warner Cable and Verizon provide. And so, yeah, this is the first, I think, in a number of agreements that'll be met. We saw just as much from Verizon this morning, where they said you could expect a deal with Netflix and Verizon here very soon. I think it only makes sense. I mean, there's a point where you can only suck up a third of the internet and not really pay for sucking up a third of the internet. And that's not necessarily a bad thing for Netflix. It means they're doing something right. And so coming up with this deal now, I think really proves that Reed Hastings is focused first and foremost on his members, and that's a good thing.
Do you think consumers in general are one of the big winners here?
I would think so, because then they're getting faster service from Netflix. Netflix is taking on this charge, and they're likely to maybe bump up rates a little bit for consumers, but that's probably further down the road once more companies like Time Warner or Verizon come out and maybe start charging them a little bit more for this faster internet downloads and more guaranteed internet access.
This story broke on Sunday. There were people online saying, watch out for Netflix's stock. They're going to get hit, and we're seeing the opposite of that today. What do you think of the stock and how it's valued right now?
I mean, wow. I mean, it is certainly up there. I have a hard time really necessarily justifying the valuation today. But by the same token, I mean, you really have to love what they've done to this point. I think when you have a CEO in Reed Hastings who's very focused on making sure that his subscribers are happy, and that's first and foremost the priority there, that's basically, that's the same approach that Jeff Bezos takes. And so we've seen that the market is willing to give CEOs like that, companies like that, a pass really, because they have this longer term vision of building out something more than just a stock price today. And I think that's really what Netflix is building out. They have a very powerful brand. I mean, it's basically become a verb. I mean, I Netflixed it last night. So there's something, what they're doing is working. And so I think that we'll probably see the market continue to cut them some slack. But by the same token, stocks just don't go to the moon. So I mean, this is one that's certainly priced for perfection. And I would advise investors just to keep a close eye on it.
All right, let's get to some of the day's movers and shakers. Lifelock falling after the security company disclosed that whistleblowers have talked to the Federal Trade Commission regarding the company's marketing practices. That's never a good sign. How bad is this?
Well, it happened once before back in 2009 and 2010, and the company took a big hit. This is a company that goes out and says they can alert you as soon as somebody has a credit check, but they don't actually own a credit checking company like an Experian does, so they don't really have that capability. And consumers and the FTC now is calling that under question. The company didn't disclose it in their earnings report or their conference call. They waited until the 10K came out for investors to realize this, so the backlash is pretty strong right now today.
The the Container Store falling after the stock was downgraded to underperform by Merrill Lynch. Is this this is kind of an expensive stock, so is this warranted?
Probably so, at least in the near term. I mean, it's a fresh IPO. It certainly garnered a lot of attention when it went public and has performed well since then. But it's easy to forget, really, this is still a very small company. I mean, only 60-something stores open today. And I mean, you have to at least question the market opportunity. I mean, it's containers, and they're not cheap containers either, Chris. I mean, you're going in there, you're going to be spending a lot of money. I don't know that it necessarily garners a lot of repeat purchases. But, I mean, it's a very well-managed company. Still, consider the fact that it's a very small float out there. I think about 35% of the outstanding shares are actually floated on the market, so it can be very volatile. And I think at this point, for a company that's still unprofitable, they've still a lot to prove. And so when you kind of look at that market opportunity and the float there and the price of the stock today, I think the downgrade makes sense. Long-term investors, I think you probably still should feel pretty optimistic about the stock, though.
Humana hitting an all-time high after proposed Medicare cuts were lower than originally expected. The stock's really been on a tear over the last year.
Yeah, it keeps chugging along. Earlier this month, it thought that in 2015, Medicare Advantage cuts would be around 6 to 7%. Now they believe only 3.5 to 4%. And this company is much more highly exposed to Medicare than some of its larger peers. Even Goldman Sachs said the top 5 insurers accounted for 30% of their earnings as Medicare as a whole. So this Medicare Advantage program isn't nearly as big as all of Medicare, but with Humana's exposure, having that possible cuts almost slashed in half is huge for them.
And finally, 3D Systems also getting a downgrade from Merrill Lynch. The report posits the company's organic growth rate will peak in 2014. That's not a good sign.
See if we can 3D print these guys some more organic growth, Chris, right? I mean, 3D printing has been the big story the past couple of years, and so your companies like 3D Systems, X1, Stratasys, they've all done phenomenally well. This is certainly the whole thought of 3D printing, this whole movement has gotten really, really ahead of itself, and I think these stocks are very expensive. There are some questions as to the overall market opportunity, and if you have a market opportunity they're predicting to be around $5 or $6 billion here by 2017, well, I mean, 3D Systems makes about $500 million in sales each year, and that's one of the bigger players in the space for sure. So yeah, I mean, there are certainly some valuation questions, I think, with all of these stocks today. They've gotten a little bit frothy, as we like to call, and I think that's why you see these downgrades, and these stocks will continue to be very volatile for the foreseeable future, I think.
All right, that's going to do it for today's action. Let's look ahead to the rest of the week. Give me a stock I can put on my watch list.
Solar City reports later this afternoon, and their conference call is at 5, so I'm looking to see how the fourth quarter rolled out, because the third quarter was the second strongest quarter ever in the U.S. for solar installations and the strongest for residential, and that's this company's bread and butter, so I'm hoping they got 2014 started off on a good note with the fourth quarter of 2013 rolling on through.
All right, Jason, what about you?
Yeah, Sina, Chinese web internet portal there, a very popular name in China, and the stock has done very well, I think, over the long haul here. But the past couple of years have been a pretty tough go of it for the company, and they now have part of the business which is Weibo, which is basically known as the Chinese version of Twitter, a little microblogging site. And the rumor has it out there that they are actually going to be looking to spin that Weibo part of the business off into its own IPO. Nothing confirmed yet, but their earnings come out later today after the market closes. And I think we might find out something on that front, so I'll be keeping an eye on it.
All right, for Jason Moser and Taylor Muckerman, I'm Chris Hill. Thanks for watching. Thank you, Harold Ramis, for everything you've done. We'll see you tomorrow.